Hello traders, welcome back to Global Forex Guide, your go-to channel for all things Forex. Today we're diving into a crucial aspect of Forex trading, understanding the different types of Forex orders. Whether you're new to trading or looking to refine your strategies, knowing the various order types can significantly impact your trading success. So, let's get started. Let's break down the most common types of Forex orders. 1. Market order. A market order is an instruction to buy or sell a currency pair at the current market price. It's executed immediately and is the simplest type of order. 2. Limit order. A limit order is placed to buy or sell a currency pair at a specified price or better. For example, if you want to buy EU or USD but only at a lower price, you set a buy limit order at your desired level. 3. Stop order, stop loss. A stop order, often known as a stop loss order, is used to limit potential losses. It's an instruction to buy or sell a currency pair once it reaches a certain price, known as the stop price. This type of order helps protect your investments by automatically closing a position that is moving against you. 4. Trailing stop order. A trailing stop order is a type of stop order that moves with the market price. If the market moves in your favor, the trailing stop price moves accordingly, maintaining a set distance from the current price. This helps lock in profits while limiting potential losses. 5. Take profit order. A take profit order is used to lock in profits when the market reaches a specified price. Once the price is reached, the order is executed, securing your gains. 6. One cancels the other, OCO order. An OCO order combines a limit order and a stop order. If one order is executed, the other is automatically canceled. This type of order is useful for traders who want to manage their risk while aiming for a specific profit target. 7. Good till canceled, GTC order. A GTC order remains active in the market until you decide to cancel it. Unlike day orders, which expire at the end of the trading day, GTC orders do not have an expiration date. 8. Day order. A day order is valid only for the trading day on which it is placed. If it is not executed by the end of the trading day, understanding these order types can help you better navigate the Forex market and optimize your trading strategy. Let's see how you can apply them in real-world trading scenarios. For instance, if you're entering a volatile market, using a trailing stop order can help you capture profits while protecting your position. Or, if you have a specific entry price in mind, a limit order ensures you only enter the market at your desired level. So there you have it, the essential types of Forex orders that every trader should know. By using these orders wisely, you can enhance your trading performance and manage risks more effectively. Thanks for watching. If you found this video helpful, please give it a thumbs up, share it with your fellow traders, and subscribe to Global Forex Guide for more insights and tips. Don't forget to check out the links in the description for my recommended Forex broker and wallet. Happy trading!